Hey investor friends, I'm Michelle Markey and today I'm going to explain the investing concept of fractional shares using some fun food analogies, and I'll give some background information and how to go about buying a fraction of a share in a brokerage account to practice, as well as some considerations to keep in mind if you're looking to earn dividends with fractional shares, and a pros and cons table I came up with regard to all that you should keep in mind with owning fractional shares, and some comparison tables from a few popular websites showing what some of the brokerage offerings are and if there's any minimums and fees and things to keep in mind with that. And I'm not endorsing any particular brokerage account, and none of this content is sponsored, so I hope you enjoy. First off, a fractional share is just a unit of stock that amounts to less than one full share. And when you were in first or second grade, you started learning about the concept of fractions. And let's say your parent only gave you 50 cents for your snack. And at the school cafeteria, that meant that you couldn't afford the $1 healthy snack bar, but you could only afford the 50-cent snack bar. So imagine that this is a fraction of your full share, and that's what you get with fractional shares of investing in stocks of public companies. I also like thinking of fractional shares in terms of pepperoni pizza pies, and with a rectangular Sicilian pie, let's say there are 15 slices, so 1 out of 15 is equal to 0.0666 of a whole share, and the Sicilian pie represents a share. Or in other terms, if you take a regular circular pizza, a whole pie would be 1 share, while a fractional share would be 1/8 of the pie, or 12.5%. And if you're getting hungry for some pizza, I'd love if you could please engulf that like button, because it greatly helps out with the YouTube algorithm, and to please subscribe because I work hard for you explaining these financial and investing concepts, and I greatly appreciate it. Thanks. The ability to directly buy fractions of shares of stocks first came out with Interactive Brokers in November 2019, and then other brokerage firms such as Charles Schwab came out with their own stock slices shortly thereafter. And this concept of fractional shares has actually been around for a while. We just haven't been able to buy them directly before until a couple of years ago. And with fractional shares, you would sometimes get this if there was a stock split in a company's stock. And let's say there was a 3-to-1 or 2-to-1 stock split, and then if you owned an uneven amount of shares, this might give you a fraction of a share. And then another form that you may have fractions of shares would be in a dividend reinvestment program, or also known as DRIP. And that's how you might have fractions of shares in a sort of indirect kind of way. Using another food analogy, imagine a whole loaf of bread represents a whole public company, and each slice of that bread is a public company's stock share. And then if you want a fraction of those shares, that would be like dividing that one slice into, say, 4 slices, and you're buying your 4 favorite companies: Google, Apple, Microsoft, and Disney, let's say. And maybe you only have $100 to invest, so you want to put $25 in each of these 4 companies. So if Google, say, earns 20% on its stock price in the year, then you get to benefit from that in a proportional way. So your $25 invested in Google would return $5, or the same 20% that the overall 1 share of stock of Google would return. And since you invested $25, you can also benefit from the rise in the stock's price. I've got a pop quiz for you. Which do you think is more expensive, a $100 share or a $10,000 share? And the answer is it depends, because you have to look at the number of shares outstanding and what is the overall valuation of the company in the public stock market exchanges. So if we take a company that has 1 million shares and each share is worth $100, that gets you a valuation of $100 million of this one company. And then let's say the same company has shares that are $10,000, but they have 10,000 shares outstanding. So each share of $10,000 multiplied by 10,000 shares outstanding gets you the same $100 million that this company could be worth in the markets right now. So being that, neither is more expensive than the other, because the whole company is worth the same. So what you have to consider is, what is the business actually worth? And maybe $10,000 is a steal if the company is really worth $200 million. Whereas if the company is only worth $80 million, then maybe paying $100 a share is not worth it. So you have to look at the bigger picture of what the company could be worth. And even though you might have stock prices that seem nominally high, like $10,000 a share, you have to look a little bit past that at the overall valuation of the company. Let's pretend we're interested in buying Berkshire Hathaway stock and we come across its A shares currently trading at around $418,000 a share. So with that sticker shock, we think, how can we invest in this company if Berkshire A stock is not available for fractional shares? And fortunately, some years ago, Warren Buffett didn't want his shares to be packaged by brokerages, so he allowed for Berkshire to effectively split into a fractional version and have Berkshire B stock, which is at 1 out of 1,500 worth of the original A shares. So it's currently trading at $277.60 per Berkshire B share stock. And if we don't have enough money to afford that whole share right now, and let's say we only have $200 in our Roth IRA, if we wanted to buy this using Fidelity, we would get the equivalent of 0.72 shares of Berkshire B stock. And so that's one way that, as long as it's allowed in your brokerage account, we could buy even a fraction of the already fractionalized Berkshire B stock if we wanted to. One potential drawback to owning fractional shares is if the value of our fractional shares is a little bit too small, and then we may not qualify and forfeit the proportional amount of dividend that would have come with that fractional share ownership. And one example of this is taking Starbucks, which is currently trading at almost $120 a share right now, and its dividend yield is about 1.5% for the year. And so that breaks out to $1.80 per share of Starbucks. And then that's paid out quarterly in 45 cents each time per share. And so if I only own $2 of Starbucks, that gets me such a small amount of a fractional share that I would then forfeit the dividend that I would be entitled to of 0.75 cents, because that's below 1 whole cent. So if I own too little of a fractional share of Starbucks, then I will no longer qualify. So just keep that in mind. If you buy a lot of fractional shares, before long, your portfolio will be as diverse as a tray of Tea Party sandwiches that come in all kinds of shapes, sizes, and flavors. And with that, let's get into my pros and cons table of owning fractional shares. And they include, with the first pro being that there's low minimum buy prices, usually starting at $1 to $5 to buy a fraction of a share. And there are many US listed stocks that are available, so investors may be able to achieve their diversification goals. And the first con would be if there's implicit fees that may apply if you are paying a higher ask price or buying at an inopportune time when the broker batch buys on their schedule, like at the end of the day, or during real-time trading, with the broker possibly pocketing bid-ask difference profits. And the second pro would be many brokers offer little to zero commission fees, and this is a boon for dollar cost averaging investors. And a second con is explicit fees may apply, but many do not have fees. There could be expense ratio fees with index funds or ETFs if you buy fractions of those. And another pro is, instead of having leftover cash from buying whole shares, all of the cash can be invested in the brokerage account across your favorite stocks or funds, and then none of your money is sitting idly in cash. And another con is not all stocks are available to buy, and not all account types may qualify, and fractional shares cannot be hedged with options. And another pro is prorated dividends to fractional shares are usually granted. And a con is maybe less dividend payout if you don't own enough of a share, like I talked about with the Starbucks example. And a pro is fractional shares are democratizing the stock market by allowing individual investors to buy what they can afford. And expensive seeming stocks are now affordable for less money that you have to invest. And a con is, just because you can buy a stock with a lesser nominal amount of dollars doesn't mean it is actually a prudent investment. It may have a faux sense of affordability. And a pro is it encourages younger investors or first-time investors with less money to invest, thereby making investing more accessible and customizable to fit someone's budget. And another con is if you have a loss of voting rights if you don't own enough of a share or don't have at least one whole share. And you can't transfer fractional shares to other brokerages, and you may have a taxable event if you have to liquidate fractional shares before you transfer the whole shares to another brokerage account. And the liquidity of fractional shares are not guaranteed, even if fully whole shares are fully liquid. So this is something to bear in mind about if you can fully redeem fractional shares when you want to redeem them and not when the brokerage thinks it's convenient. And a pro is with some brokers, you can give the gift of ownership to minors in a custodial account, which is kind of nice if you want to give them a nice round primary investment of $100 in a stock and it's not selling for $100, but that's all you want to give. So that's kind of convenient. And final con is the psychological effects of having fractional shares, where there could be increased trading that's short term, and that means it's less long-term focused of investing for the long term. And there could be never-ending decimals of minimal ownership. And if you're already used to this with some alternative assets like cryptocurrencies, maybe you're already accustomed to seeing the value of your asset in a lot of decimal points. So if you're okay with that, maybe you're fine with fractional shares also taking that form. In addition, I encourage you to shop around for what the different brokerage firms are offering in their fractional share programs, and some popular sites that go through this with their tables comparing and contrasting these brokerage offerings include ones like Investopedia with the number of stocks that are available to buy as fractional shares and also the minimum to buy into, or if you go to Go Banking Rates and they also show asset types and the minimum to buy into and the fees involved, or also if you check out the balance and why they chose the brokerage provider, as well as if there are also recurring fees. So among all of these, definitely consider the various options and what works best for you. Could fractional shares possibly be the coolest thing since sliced bread with something like SoFi, or if you're ready to scarf down a stock slice with Fidelity? Who knows? Go find out and learn as much as you can. And if you enjoyed this video or learned something, please like and subscribe. And I wish you well on your journey to being the best investor you can be. Till next time.